Hi besties! This week we're debunking a big myth and covering some of the different types of mortgages available that may help make it easier for you to buy a home. To be honest, buying a house or condo is probably one of the most stressful things you can do. It's probably the most money you've ever spent on anything. There's a zillion legal documents you need to sign, and it feels like brokers and realtors are speaking a whole new language. And the entire process can be pretty competitive. But since I'm Vivian, your rich BFF, and your favorite Wall Street girly, I'm gonna walk you through 4 special types of mortgages that may help you buy your next place without forcing you to cut back on your avocado toast and Starbucks habit. Please like, comment, and subscribe to learn more about being good with your money. Let's get to it. So first things first. In pop culture, homes are always spoken about like a rite of passage. They make it sound like everyone gets a conventional mortgage, they buy a single family home with a white picket fence in a development, and that Donna and Steve made sure to put 20% down on their home. So it's no surprise that most people think that's how you're supposed to do it. But in actuality, you don't need to put down 20% to buy a home. That is a myth. And here are 4 types of loans where you won't need nearly as much cash. First and foremost, FHA loans. FHA stands for Federal Housing Administration, and an FHA loan is a home mortgage that is insured by the government and issued by a bank or other lender that is approved by the agency. Quick history lesson, back in 1934, during the Great Depression, the housing industry was in some hot water. Default and foreclosure rates were sky high, buyers normally had to put down 50% of the home cost just to buy, and regular schmegular people couldn't really afford them. In fact, at the time, 90% of the US was renting their residence. So the government said, we're gonna create the FHA. It's going to help ease lenders' concerns about getting paid back and make it easier for people to qualify for home loans. Fast forward to modern times, the FHA loan is now one of the most beloved mortgage types among first-time homebuyers and helps to make homeownership possible for up-and-coming individuals, young couples, and families. Best part, FHA mortgage approval standards are considered to be some of the most friendly across the industry. Normally, having a high credit score is almost mandatory to get a mortgage. But with an FHA loan, if you have a credit score of at least 580, you can borrow up to 96.5% of the value of a home with an FHA loan as of 2022. That means the required down payment is only 3.5%. And even if your credit score is really not the best, somewhere between 500 and 579, you can still get an FHA loan as long as you can make a 10% down payment. The only real drawback is that you will have to pay PMI, private mortgage insurance. PMI is required anytime you put down less than 20%, and it's essentially a monthly fee that the FHA will collect as an insurance premium for lending you the money while letting you put down so little. And this is a great segue into the second type of mortgage. A conventional 97. This is a conventional mortgage, but contrary to the FHA, which helps folks with typically lower credit scores, a conventional 97 is a type of loan where you get rewarded for having a high credit score by only having to put a 3% down payment. This is a lot of the same benefits as an FHA loan, but fewer upfront insurance fees, and once you have 20% equity in your home, your private mortgage insurance automatically drops off. While folks with credit scores as low as 620 have qualified for these, most folks who get conventional 97 loans have a credit score in the 700 or 800s. A few things to keep in mind. These are only for first-time homebuyers. Kind of a misnomer because it doesn't actually have to be your first home, you just can't have owned a home in the past 3 years. Also, for most locations, the home can't cost more than $453,100, and in high cost of living areas, this amount is increased to around $679,650. There's even a lookup tool to check what the cap is in your area, and I'm going to link it right here. The home has to be your primary residence, and as mentioned, you will pay PMI until you hit 20% equity. All in all, if you don't live in a super competitive housing market, a conventional 97 loan may be a great way to kickstart homeownership. Third, we have USDA loans. If you're more Little House on the Prairie than Sex and the City, get ready to thank the US Department of Agriculture for one of the government's least known mortgage assistance programs. Back in 2017, as part of its Rural Development Program, the USDA helped over 120,000 families buy and upgrade their homes. The program's mission was to improve the economy and quality of life in rural America. USDA loans offer low interest rates and no down payments, making them a super accessible mortgage option. The USDA offers 3 main mortgage types: 1. A direct loan from the USDA. These are for low-income and very low-income families and individuals. Income limits will vary by location, and if you're curious, you can look them up here. I'll link it. Similar to an FHA loan, the USDA can also guarantee a mortgage issued by a participating local lender. This lets you get a competitive mortgage without putting any money down, but again, as with an FHA loan or a conventional 97, since you'll be putting less than 20% down, you will have to pay PMI, private mortgage insurance. And third, the USDA offers loans and even grants for home improvement. Yes, grants, as in free money. Packages can also combine a loan and a grant, providing up to $27,500 in assistance. A mortgage program sponsored by the USDA might seem like it's targeted to farmers and ranchers, but truly anybody within the income limits and interested in buying a home in a rural area is eligible. And last but definitely not least, VA loans. I'm not exaggerating when I say this. If you can get a VA loan, you should. They are truly the best mortgage product available. VA loans, similar to USDA loans, allow you to put 0% down on your home, and as the name suggests, are available to current and former members of the US military and surviving spouses. But here's what makes them better than everybody else. For qualifying borrowers, you don't have to pay mortgage insurance like you would for all of the other loan types I mentioned. So, like I said, pretty much the best mortgage product available. These loans are offered as a major incentive to help give veterans a financial leg up in return for them serving their country. Well deserved. Whether you're looking to close on a home tomorrow or you're just looking, being educated on different mortgage types will make sure that you're making the most of your money and the right financial decision for you. Let me know what you think and make sure to like and subscribe for more money, real estate, and investing tips. Talk soon, besties.